So today's Monday, the 27th of July, and coming into the market open today after last week, which saw the Qs make new lows overall, but it is potentially a undercut and reclaim, with today kind of gapping up into the open, which is constructive based on everything else that's happening in terms of the broader indices, the S&P, the Dow Jones and IWM. They didn't make new lows, and they're holding their 50-day moving averages relatively well. But yeah, more importantly, the big story that I'm paying attention to right now is oil, based on the fact that there has been no further strikes or escalation over the last 2 to 3 days between Iran and US, and that has coincided with oil hitting this resistance here, which is this gap that was unfilled until now, and it just looks like this is a textbook gap fill and sell off afterwards. So the fact that it's kind of coinciding with de-escalation with Iran and US, it makes me feel that with the fact that indices are holding up so well, or relatively well for the most part, excluding the Nasdaq, it could pave the way for some strength to come back into the market. The rest of the indicators that I'm looking at in terms of breadth haven't really deteriorated too much. The number of stocks above their 20-day averages did come off a little bit last week, but for the most part, it's still kind of hovering around this 50 midpoint. So nothing too major in terms of breadth deterioration, in my opinion. The number of stocks making monthly highs, it hasn't really gone anywhere, so it's not got worse. It's obviously not got better, but it's not got worse, which is the key thing. A bit of a move higher for number of stocks making 52-week highs, which is something to definitely pay attention to. A potential clue for strength coming back into the market, and that is coinciding with the fact that number of stocks making new 52-week lows didn't really move. So in line with StockView's primary breadth indicators as well, it's still showing that the bears are in control, but it's nothing too drastic. It's fairly balanced for the most part, and the fact that everything else is kind of holding up relatively well just makes me believe that it's not going to end in some capitulatory kind of action to the downside. If anything, it's just going to be a consolidation based on time, as opposed to price. And I don't know when that's going to end, but there's potentially signs that it could kind of end in the not too distant future based on what's happening with oil. The fact that bonds did break out last week was definitely a cause for concern, but really it's kind of contained in the sense that it's not there's no alarm bells ringing. There's no massive moves. They're breaking out, but they're not massive moves. So there's no like real distress in that sense. The big news events coming in for this week though are the FOMC statement and the Fed funds rate decision. So that could potentially pave the way a little bit in terms of what the market does decide to do, but no changes are expected. So I mean, I feel like it's probably going to be a non-event, and the fact that Walsh has not really been making any comments for the most part in terms of giving away any clues as to what direction he might want to go. He's just basically saying he's reacting to what the market's telling him. So yeah, in my opinion, it's probably going to be a non-event, and I think based on all of that coming into this week, I will probably just stay more neutral. I'm a little bit optimistic, I suppose, in terms of they're potentially seeing some strength come back into the market. But yeah, for now, I think I'm just gonna remain patient and just wait for the market to show its hand in some way And if it doesn't, if it just continues to chop, then I'll just remain, being patient and sitting on my hands. There are some big earners coming in this week in terms of Amazon and the rest of the some of the other Mag 7 stocks, Microsoft, Meta. So maybe this will help kind of dictate the direction of the market. But I'm just gonna come in just neutral and react to kind of what the market gives me.